Hi guys, happy Friday and welcome back to Financial Wellness Fridays. Last week we talked a little bit about inflation and then an investment strategy to help hedge your funds against inflation, but I did get a few requests to talk a little bit more in depth about what inflation is and why it matters to you. So I did want to do that today and go a little bit more into inflation and why inflation is so high right now. But I did want to mention at the beginning of this video that as we talked about I-bonds last week, and I mentioned that the rate was going to increase because it was the end of April, it has increased to 9.62%, which is a little bit higher than inflation. So if you didn't purchase an I-bond in between last week's video and this week's video, I would strongly recommend you do that now with any leftover funds after you have established an emergency savings that you need liquidated. I highly recommend adding any of those extras into a savings bond investment if you're still not comfortable with the stock market. That way you can hedge your money against inflation. So let's jump right into inflation and a little bit of an economic lesson. So first, let's talk about what inflation is. Inflation is typically defined as a loss in purchasing power or an increase in the cost of goods and services in a certain economy. So basically what this means for you is if you have $100 today that can buy a product that is $100, but you choose not to buy the product that's $100 and rather save the $100 in an account that doesn't give you interest, in the next year, if inflation increases and this product, let's say now costs $105, that $100 that you had the year before that you could have purchased the product with can no longer purchase that product because the price of the product has gone up. So not only has the price of the product gone up, one definition of inflation, but your $100 has lost purchasing power. Now you can buy less with the same amount of money. So that's essentially what inflation is. And we're seeing that a lot right now. So I felt like it was really important right now to kind of talk about inflation. And I know a lot of people hear about inflation, but they're not really sure what it is. So there you go. In the United States, inflation is basically decided or determined by two different factors or two different gauges. The first is Consumer Price Index, which is the CPI. And this is essentially the cost of goods that consumers purchase out of pocket. So this is going to be things like groceries, gas, anything like that is a consumer good or service. And if that increases, then, well, the CPI increases. That means the cost of the goods that you're buying out of pocket are also increasing. But another gauge that I feel like isn't talked about as much is the Personal Consumption Expenditures Index, the PCE. This includes all things that consumers purchase, whether they purchase it out of pocket or through someone else or get assistance in purchasing it. And I think the best example of this is like healthcare, because a lot of people have healthcare insurance or it is paid for partially by the government. So this also marks those things that aren't necessarily purchased out of pocket. So rises in healthcare are going to be reflected in the PCE, whereas they might not be reflected in the CPI. This measure is also really important because it marks changes in consumers' patterns in consumption. So that's essentially what inflation is, but let's talk a little bit about what causes an increase in inflation and why we're seeing an increase right now. So inflation can go up or down based on many different factors, but there's two main reasons why inflation is increasing right now. The first is a surplus in cash and an increase in spending. So over the pandemic, a lot of people were in lockdown and then the government also issued stimulus checks. So this means that people were saving money because they weren't traveling, they were staying home, less purchasing of gas and things like that. So they were saving more money, there's more money in their savings accounts, and they were also given money by the government that was in addition to their wages. So a lot of people had an excess of savings more than they usually would. And once things started to open up, that created more spending. So there's a surplus in spending. So this caused a shortage in supply. Businesses weren't expecting nor prepared for the excessive spending that was happening, and this caused, of course, a shortage. And not only that, there were a lot of warehouses and suppliers that were down because of COVID, still shut down. So businesses had no choice but to raise their prices because they had a shortage in supply and they still needed to turn a profit in order to keep their businesses open. So this, of course, caused an increase in prices. Now, what usually goes hand in hand with an increase in prices, especially in businesses, is an increase in wages. And we've definitely seen this across the United States in general. And this is caused because people who are now having to pay more for products that they used to be able to get at a lower price, especially essentials like food, gas are now going to be turning to their employers and demanding a higher wage so that they can continue to live in the occupation that they have. And an increase in wages also causes an increase in prices because businesses are now going to have to increase their prices in order to continue to turn a profit and keep their employees employed because they now have to spend more on the wages. So that's basically one of the most simple reasons why inflation goes up is either an increase in cost in raw materials, which would be, like, for example, houses are really expensive to build right now because their lumber is really expensive, or an increase in wages because obviously the businesses now have to pay more in order to have the same amount of employees. Now, here's why it matters for you. If you're trying to save money, and like I said earlier, if you save $100 in a low interest or no interest bearing account, in a year, if inflation continues to rise, that $100 is going to be worth less than it was today. And that's why investment is so important. So we're going to continue to talk about investment because I think that is super important that young people start investing their money now so that they can hedge against the increasing inflation. Inflation right now is at a 30-year high, I believe. So it hasn't been this high in 30 years, which means it's more important now than ever to start investing. I know this might have been a vocabulary economy heavy video, so if you have any questions, definitely leave them down below. Also, I'm planning on bringing my dad onto the channel, who is a master investor, to talk a little bit more about investing in the stock market. So if you have any questions for him, please leave them down below. We're going to be doing a Q&A where we can answer all of your questions, and I'm super excited for that. As always, share this video if you think your friends will benefit from learning a little bit more about inflation. Please subscribe and stick around so that you can learn more about investing and, of course, other topics that we're going to cover on this channel. And, of course, give this video a like if you thought it was helpful. Have a great day, and we'll see you next Friday.